how to invest in foreign real estate as an American. There are a number of factors that you need to figure out if you're a U.S. citizen investing in foreign real estate. First off, how are you going to get financing? You're going to get a mortgage, invest in your IRA. What about foreign taxes? How does that work with the U.S. tax system? What about things like a holding structure? Should you do it in an LLC, your name locally? And then of course, finally, is it reportable to the IRS? I'm Vincenzo Villamena, founder of Global Expat Advisors, and we help Americans that want to invest abroad, live abroad. As an American, I've invested in places in Colombia and Brazil, so I know exactly how to do this. First point is, again, how do you finance it? A lot of times it's very difficult or very expensive to get a mortgage abroad. So there's really two ways we see it. You could either get a US home loan, either a home equity loan, or take an additional mortgage out if you do have a US property or rental property, or actually leverage your US stock portfolio to get that money out and invest abroad. The other way to do it, which I've done it, is actually to open up a self-directed IRA, which we have more information and video on. But a self-directed IRA is a type of IRA that allows you not just to invest in public markets, but allows you to invest in things like real estate, private equity, venture capital, anything, even up to livestock, you can invest using a self-directed IRA. And so the first step in doing that is you take your typical IRA and you roll it over into a self-directed, and then that's what you use to buy your real estate. Again, if you want more information, we have a separate video on that. In the United States, rental income is considered passive income. And what that means is you would receive a foreign tax credit directly on that passive income on your US tax return. You would get a dollar for dollar credit regardless of whether you have a tax treaty with the United States or not. Now let's talk about deductions. In the United States, you get depreciation. The difference between US depreciation and depreciation in a foreign real estate is that in the foreign real estate, it's over 40 years, not 27 and a half. So actually it's gonna be a smaller expense. However, you could deduct everything else, property taxes, any sort of maintenance, repairs, etc. And on top of that, if you like going to that place which you own foreign real estate, then you could deduct travel. So I always recommend my clients to buy in a place that they travel to and frequent often, so that they can actually deduct that expense traveling when they go once a year to check on their rental real estate. All right. And finally, everything needs to be reported. Okay. Now, a lot of people ask, well, should I buy it again in a US LLC, in my name, in a foreign LLC? A lot of that has to do with your local rules and regulations. And so every country is different. For example, in Colombia, I own my real estate in a SAS, but in Brazil, I own it in my own name. And so check with your local counsel to figure out what's most tax efficient, both in your home country as well as in the United States. But at the end of the day, everything needs to be reported. And so if you own foreign real estate in a foreign company, then we have to report it on Form 5471, which is a form for reporting foreign companies. It could also be reported on Form 8938, depending. One thing about foreign real estate is that if it's owned in your name, you do not have to report it on either form. Of course, if you have income, you do have to report that income. Listen, a lot of this stuff is complicated, and that's what we do at Global Expat Advisors. So if you have any questions, book a consultation with us, and we'd be happy to help. Thanks.